Meanwhile, MTN Group is setting its sights on becoming Africa's digital leader by 2030. With a bold new strategy beyond its Ambition 2025 plan, the company is focusing on consolidation, fintech and digital infrastructure. I caught up with the MTN CEO, Ralph Mupita, about the company's vision for the future and how it plans to achieve its goals. Let's take a look.
We're pretty excited about the business, Africa and the opportunities that are there. And we spent a bunch of time with the board and the executive team thinking about the next 5 years, frame it beyond 2025.
Yeah.
And we see 6 pivots, as we call them, that are important for us to execute on to capture the growth in digital inclusion and financial inclusion that we see. The first is to arrange ourselves as 3 distinct platforms: connectivity, fintech, as well as digital infrastructure, and ensure that our businesses are well-resourced, the right capital and the right skills in each of them to be able to take advantage of the opportunities that we see. Within connectivity, the next 5 years is going to be really a push on home. We see home being the next growth engine for the company. And we are going to leverage different types of technologies, FWA, FTTH across our markets. The home connection opportunity is significant, particularly when you look outside of South Africa. South Africa still also has an opportunity there. When we look in terms of the fintech platform, that one is to carry on the strategy we've been executing of building a modern business that is transformed from mobile money business into a amplified experience with advanced services for our customers. And then on digital infrastructure, we focus on completing our fiber rollout, as well as looking at how we participate in data centers. And all 3 platforms underpinned by the fusion of AI and AI for productivity, but also for new revenue, as well as the way we serve our customers. So pretty excited about that, and we see significant growth opportunity over the next 5 years.
It's actually quite interesting also that you talk about how there's still more opportunity for connectivity in South Africa. In terms of connectivity and fiber, of course, we've seen the landscape with Massive and Vodacom, that deal finally getting through the line. How does that change how MTN would be navigating connectivity in South Africa?
Firstly, I think it's been quite a watershed moment from a competition point of view that, the deal has been supported by the regulatory authorities.
Yeah.
We look globally at seeing what trends are, and consolidation either at the asset level or the kind of topco level. We're seeing that play out in Asia, Europe, the United States, and elsewhere. And South Africa has been, with respect, a bit of a laggard in this regard. So the competition frameworks are moving in the direction of where we're seeing most of these shifts globally. For us on home, unlike in other markets, we've probably been late to the game around deployment of fiber. Maybe something we should have been doing 10, 15 years ago. It is what it is. And so for us, we see home opportunity in 2 streams. Firstly is the fixed wireless access. We have good bands of spectrum where we can pursue fixed wireless access home opportunity, and we are pushing that. That is always going to be constrained by the quantum of spectrum that you have. But we are moving, in our H1 results, we spoke about the good progress we've seen in home in South Africa. That was really about fixed wireless access. The fiber opportunity, fiber to the home opportunity, is the one where we have to apply our minds around partnerships and or more M&A activity. And we'll kind of apply our minds on that. Nothing specific and imminent right now, but we'll keep applying our minds around the partnership and potential kind of M&A to deal with the opportunities in home that are driven more by fiber to the home rather than fixed wireless access.
Yeah. Just as, drilling into fintech, you mentioned that a lot of African countries still use USSD because a lot of people, from a price point of view, can't really afford to have phones that can handle the kind of digital connectivity where technology is going. And you spoke about actually, creating a space to speak to OEMs so that they can, make more affordable phones that are capable of taking in that kind of digital capacity. How sticky could those engagements be?
This issue is really about affordability. I mean, our customers earn $2 to $3 on average, yeah? So they have limits to what they can afford. A decent data-capable smartphone, looks, almost like an iPhone.
Yeah.
If you want to say that.
Yeah.
With a nice screen, good memory, battery life, etc. That's about $40 to $50. The price points you need for what we call mass diffusion of smartphones is more closer to 20 and below. 15 to 20 is the sweet spot. And if we got more and more of those phones in the markets, and things like removing duties, import duties, etc., will go a long way, because some of the total cost stack of, let's say, a $40 to $50 phone, 30% of those could just be taxes. So the taxes could be removed. The OEMs were able to make, from a mass production phones that are much closer to $30, you could land in customers' hands a $20 smartphone. At that point, you look at our own base, we have 298 million subscribers at the half year. 164 of them are using data regularly. It means the balance, 130 plus, are still stuck in the voice era. They're making voice calls, etc. And so we are talking to OEMs. We're also looking at different funding models. Can there be device financing that's available? I think we're 2, maybe 3 years away from that inflection point where we see these. And I think that's what will drive kind of mass adoption and seeing average usage per customer grow. We're currently about 14 gigs per user on average. I mean, in India it's 30 gigs, 2 times X. The difference there really, and India is a $2 to $3 ARPU market, order of magnitude there or thereabouts. The difference is that they have the services, but also they have the devices that are low cost.
Going into digital infrastructure, you also mentioned data centers. And just highlight then MTN's role in the greater AI and cloud landscape in Africa. I think you mentioned that we still need to play catch up. And is MTN willing to put MTN money into that growth effort in AI?
I think this is a big area that's 5, 10, maybe even 15 years runway of growth. And our position is that we need to participate within kind of owning some of the digital infrastructure assets beyond fiber. So data centers in this regard become pretty important. The model that we would be pursuing is not to fully fund kind of data center build out. We would look to partner, find the right partners that have got skills and capability and capital, and we will bring capital and our own workloads into these data centers, and obviously some of the bigger data centers that we would participate in the build out of would be ones that are on an open architecture basis. So it's not just our own workloads that are going through it. It's kind of third-party workloads coming through. So we see an opportunity there. We also see an opportunity at the edge. So the data centers are one part of the ecosystem, but the other edge is the workloads that are much closer, kind of latency-sensitive workloads. And this is much more kind of with the so-called edge points, and particularly with businesses that are our enterprise customers. So we are working through how we responsibly deploy capital to those opportunities and ensure that we are able to participate in the growth. That's going to be through a partnership model, particularly on the build-out capital side. And with the rise of AI and AI-driven workloads, being a true digital inclusion company, we can't but not participate in that. But we have to participate in a smart way. And I mean, AI is just very nascent at the moment. And it's going to have exponential growth over the next decade plus.
Ralph, just as we wrap up the conversation, you have reiterated again that consolidation is needed in the telcos industry, not just in South Africa, but in the broader Africa continent. And I actually just want to drill into South Africa specifically, and particularly the prepaid market, where you are struggling, and I guess just the broader telcos industry as well. You mentioned that Telkom has taken some market share from MTN there. And I know you have said in your presentation that in contrast to what the market believes, that you are not in active discussions with any advisors about a takeover of Telkom at this point in time. You spoke about trying to get that market share back that companies like Telkom have taken, particularly Telkom. And I'm wondering, is it easier to gain back that market share, or to rather take over the company that has taken that market share, and where you'd be basically be doing the industry a favor?
That's quite a question. No, look, I mean, it's a great question, and I'll give it a great answer. I mean, a couple of points. Yes, consolidation, our view is consolidation is inevitable. Purely because of economics. Not enough profit pools to sustain long-term investment and getting the return on investment at an attractive level.
Yeah.
So that's the one. And whether it happens now, in the near term, it will happen. I think that's the point number one. Point number two, I mean, we back ourselves to be able to, get back whatever market share we've lost on the, what we've been saying to the owners of MTN, the shareholders, is that we are going to be a bit more aggressive in kind of getting back a bit more of our market share. Next 2-3 quarters or so, you'll find us a bit more aggressive in that space.
Yeah.
Get back our customers, and I think that's a sensible approach. We reduced kind of our EBITDA margin guidance, kind of in the medium term, from 37 to 39 to 35 to 37, in part to deal with getting capacity to invest and being a bit more aggressive to win back our market share. So that's the way we think about it. I don't think you have to buy a whole company to get back your market share in that regard.
That was Ralph Mupita, CEO of MTN Group.